Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on cryptocurrencies. On Bitcoin, as you could see, we do not have so big drop as we see right now on the stock market, but supposedly it still stands ahead. It's just because situation becomes really tough as bond market shows the worst collapse since 1949. In the stock market, it's also very strong downside tendency is that Fed is getting and pumping out all money that they could to support the bond market, the debt market in the United States. So the system gradually starting falling apart. It's just because except the Fed reserves that it has as just money on the accounts from the commercial banks and the deposit of the United States Treasury that together accounts for 2.2 trillions. It has no additional money inflow that needs to support the financial system of the United States, and I would say this global financial system is just because other donors of the capital who actually, as you know them, Soviet Union, Japan now has the very strong trading deficit, negative current account balance, so they can't provide more cash for supporting of the bond market in the United States. They are not buying the treasuries right now. On the domestic market, nobody buys United States Treasury bonds just because they provide negative real yield. With inflation around 8%, or let's even consider the core inflation at the 6.5%. When you have the yields around 3.5, well, it's not really very attractive. So that's put the overall system in this very difficult situation. For some time it could stay on the surface, it will keep going and functioning, but the situation becomes really difficult. And some reflection we could see even on Bitcoin market. Our market shows no bounce up from the 20,000 area. It's trying to break it down, although it stands above the previous lows. This was in June, but still overall performance that we see currently is not very positive. Just to give you some minor hints, let's take a look at briefly at the CDS of the credits use. What is the CDS? CDS indicates the probability of default. This is the credit default spread. So in fact the difference between riskless asset, where it should be zero premium for the default, and most risky asset, where the premium for default might be very high. Let's take a look at in the September 28 at the crash of the Lehman Brothers. This was 250 basis points default spread. Currently it stands very close to it. On the shares of the credit users, if you will take a look, they are dropping very fast. So I wouldn't exclude the moment if the credit use will become the second Lehman Brothers in the nearest time. Anyway, this just indicates the situation in general on the stock market. That's most weak members of the stock market is trying to feel big problems. So on the weekly chart, we do not have any big changes. Market is moving lower, and we already talked that here we identify the bearish dynamic pressure. This reversal candle is not valid anymore, just because market dropped below its lows, and this performance usually suggests downside continuation to completion of the OP target. So in fact, this is nothing more but the shape of the butterfly that we already talked about on the daily chart. So currently we do not have it here, but you easily could build it on the weekly chart. So something of that sort. It is easily could be constructed with the 1618 extension precisely around the OP target. So that is how the overall performance might look like within the few months probably. This market will complete this area. Meantime, on the daily chart, we do not have the big shifts. We said keep an eye on the possible pullback, but if you would like to, this pullback should be tactical, but if you really would like to make the long trade, just watch for 1740 area, just because there we will get the completion of this butterfly, and that will be lower border of this channel. So at least it provides some minimum support that we could use for short-term intraday bounce, and that just minimizes your potential risk. If market will turns down again, that will happen probably after some minor bounce up that could lead you to move stops to the break-even. That's the major idea. On the 4 time frame chart, we do not have any big changes. What is currently interesting is that if you take a look at the daily hourly chart, you will see the overall performance. Recall that the last time when we said if you would like to take the long position, keep an eye on the possible patterns. So if you do not want to wait for 1740, wait for the patterns. Once again, it might be double top, head and shoulders or something like that sort, and take a look at the current market performance. This is not the way how usually bullish reversal stands or bullish reaction on the hourly chart stands. So this definitely, well, doesn't match to normal performance of the, if you suggest this head and shoulders, this, where is the right arm? This is well, really weak action on the second part of the potential pattern that indicates that probably sooner we should get the breakout down and taken out of these lows rather than some reversal. This is also doesn't match to the double bottom. So here's market even hasn't reached the neckline and starting down, moving to the downside. So this tells you that if you're still watching for taking the intraday long position, we would say that this is not suitable performance for that. Here's the clear signs of the bearish type of action, and we keep our previous scenario that wait at least for the 1740 area and then see what will happen. So current performance looks well, tricky and not attractive for taking any long position by far.